name is Mohammad Ehsan. I am working in Nadeem and Mahindra Chartered Accountant as an auditor. I am a CPA and a CGA from Canada, ACCA from UK and Masters in Economics from Pakistan. Today I have selected a very important topic to discuss with you, which is Conceptual Framework for Financial Reporting, issued by International Accounting Standard Board IASB in March 2018. It is actually a revised version of a previous framework which was issued in 1989 and updated in 2010. Previous version was very useful but still incomplete. Here the most important thing which must be remembered by us is that this conceptual framework is not a standard and it does not override any standard. So if there is a definition in a conceptual framework and there is a definition in standard, you must have to follow the definition of a standard. So the question comes in our mind. What is the purpose of this conceptual framework? The purpose of this conceptual framework is it assists management to prepare consistent financial information where no standard applies, or standard allows to change in accounting policy. It helps all parties to understand and interpret accounting standard. It helps IASB to develop new standard on consistent concept, so the financial information becomes useful to its primary users. There are 8 chapters in this conceptual framework. Chapter 1 is the objective of the financial reporting. The objective of the financial reporting is to provide useful information to its primary users, which are investors, lenders, creditors and other fund providers, so they can make informed decision of buying, selling or retaining stock, providing or setting off the loans, voting or influence the management decisions. Chapter 1 describes more general purpose reports. They should contain information of economic resources and claims. This refers to financial position, the changes in economic services and claims resulting from entities' financial performance. Chapter 1 puts an emphasis on accrual accounting. Chapter 2 is the qualitative characteristic of financial information. This chapter is divided into 2 parts. Part 1 is the fundamental qualitative characteristic of financial information, and part 2 is enhancing qualitative characteristic of financial information. Fundamental qualitative characteristic of financial information consists of relevant information and faithful representation. Our information is relevant if it is capable of making difference in decision and if it has a predictive value. So that means it must have been prepared on basic underlying assumption of going concern. A faithful representation means information must be neutral, complete, free from fraud and errors. Part 2 enhancing qualitative characteristic of the financial information, which are comparability, verifiability, timeliness and understandability. These qualitative characteristics enhance the usefulness of the financial information, but they are not capable to make difference in decision. Chapter 3 Financial statement and a reporting entity. What is financial statement? Financial statement is a particular form of report which consists of asset, liabilities, equity, income and expenses of a reporting entity. What is a reporting entity? Reporting entity is an entity which required or choose to prepare financial statement. It can be a legal entity, a part of legal entity, or two different legal entities. Like in consolidated financial statements, where subsidiary and parent are required to prepare financial statements as a single entity. Separate financial statements where subsidiary or parent prepare financial statement as a separate entity, reporting entities. Combined financial statement where two different companies which are not linked as a subsidiary or parent relation prepare financial statements. Chapter 4. Elements of financial statements. This chapter provides definition of assets, liabilities, equity, income and expenses. Element of financial statement, there are 5 basic elements. Asset, a parent economic resource controlled by an entity as a result of past events. Liability, a present obligation of the entity to transfer an economic resource as a result of past events. Equity, the residual interest in the asset of the entity after deducting all its liabilities. Income, increase in asset or decrease in liability resulting in increase in equity other than contribution from equity holders. Expenses, a decrease in asset or increase in liability resulting in decrease in asset other than distribution to equity holders. Chapter 5. Recognition and derecognition. This chapter provides criteria for recognizing or derecognizing. Recognition means including element of financial statement in the financial statement. If you decide on recognition, you decide on whether to show this item in financial statement. Confirm it if it meets the criteria of chapter 5. Derecognition means removal of an asset or liability from the statement of financial position. Chapter 6 is measurement. This chapter provides 2 basic measurement bases. Historical cost, which means this measurement is based on the transaction price at the time of recognition of the element. Current value, it measures the element updated to reflect the condition at measurement date. Chapter 7 is presentation and disclosure. Have you ever realized why across the globe same set of financial statements are being prepared? The main aim of presentation and disclosure is to provide an effective communication tool in financial statement. Chapter 8 is capital and capital maintenance, which consists of financial capital. This is same as the net asset or equity of the entity, which has nominal monetary units or unit of constant purchasing power. Second is productive capacity of an entity based on units of output per day. Guys, this was an overview of Conceptual Framework for Financial Reporting. If you want to expand your business, you must need finance. For finance, you must have to approach investors, lenders, creditors and other fund providers. For this, you must have to prepare your financial statements as per Conceptual Framework and International Accounting Standard. If you do not know much about it, approach some professional firm of accountants like us. We can help you by auditing or reviewing your financial statements as per Conceptual Framework and IFRS and IS to maximize your chances to secure investment from third party from the team of Nadeem and Mahindra Chartered Accountant DMCC branch.